investors, welcome to Proceemo, the Value Stock Analyzer. Today is January 9th, 2023. We're going to do something a little different this time for our stock of the week. Usually, we're sharing a company with questionable or strong value. This week's stock of the week is an absolute train wreck and beyond. I'm talking about Bed Bath & Beyond. They have more problems than a worked over Keurig aisle on Black Friday, so let's get into it. Don't forget to like and subscribe. Your support will help us continue making content for you. And please check out Proceemo.com to see the following analysis for yourself. Bed Bath & Beyond was founded in 1971 in Springfield, New Jersey, about 25 miles west of New York City, by two guys who were managers at a retail store called Arlen's, and thought they could do it better. And they did, because Bed Bath & Beyond has been in business for 52 years compared to the only 30 years Arlen's lasted. Good job, guys. Arlen's filed for Chapter 11 bankruptcy 50 years ago in 1973. Bed Bath & Beyond is likely to file bankruptcy any day now, in 2023. Let's see why. Bed Bath & Beyond is trading at $1.31, which is the 52-week low, down from $14.43 a year ago. It did have a high in March 2022 of $27.23. From that high to our new low, it is a drop of 95%. Ouch. Our fundamentals are not looking great. Bed Bath & Beyond is not profitable anymore, and they haven't been in quite a while. More on that later. They have a negative earnings per share of $5.64 and a market cap of only $153 million. They still have 953 locations and 50,000 employees, so a market cap that low at $153 million with such a large business is just unfortunate. Coming down to revenue, we see it's been dropping for the last 5 years. It peaked in the fiscal year 2018 at $12.35 billion, down to $7.87 billion in 2022. And they're likely to report under $7 billion for 2023 in just another month or so. With revenue down 40+% over the last 5 years, you can imagine earnings are going to be even worse. And they pretty much are. 2018 was the last profitable year for Bed Bath & Beyond, with a nice $424 million in earnings. Unfortunately, that was down 38% from the year prior when earnings were $685 million. Fast forward to 2022, and earnings are a negative $559 million, and earnings this year are likely to top $1 billion. Again, ouch. Bed Bath & Beyond's cash position is suffering as a result. And worse, their current liabilities are greater than their cash position and they have negative cash flow. This really only leaves Bed Bath & Beyond with two options. Get into more debt and get some cash fast. Declare bankruptcy. Bankruptcy! Taking on more money would be an okay option if they thought the business was in a short-term jam, but based on those decreasing revenues over that period of time, this looks systemic. Bed Bath & Beyond does have some assets, just over $5 billion in assets actually. This seems like a positive, right? Maybe the silver lining we're looking for? I mean, all that real estate inventory is worth something, and it is, but they have just under $5 billion in liabilities. In fact, if we subtract the $4.9 billion in liabilities from the $5.1 billion in assets, we're left with $174 million, not far from the current market capitalization. Bummer. Well, even a liquidation might mean some value in the stock, right? That can be true with certain types of stocks, but generally not with common stock. BBBY is most likely going to be worth zero at the end of the day. I can't see any reason to try and catch this falling knife. To further the point, there is zero institutional ownership reported for Bed Bath & Beyond, down from an astounding 96% a year ago. This is actually a great example of how wrong institutions can be in just a short period of time. The scorecard has nothing redeeming in it for the company. The most notable metric is liabilities over assets, which is nearly 1. We like to say a healthy value is between 0.3 and 0.6. Under 0.3 might mean the company is not leveraged enough, which is better than exceeding on the higher end. Over 0.6 means the company is over leveraged. In Bed Bath & Beyond's case, they are over leveraged due to some debt in recent years in attempt to right the ship. it didn't work. There's really not much else to say about Bed Bath & Beyond. Shrinking revenue, negative earnings, negative cash flow with soon to be more liabilities than assets. Bankruptcy is in its very near future, unfortunately. It was a cool store after all. 15 years ago, if you were just getting started in your first apartment and needed some home stuff, Bed Bath & Beyond was the place to go. Now, Amazon is cheaper and faster, or Walmart. And you don't need a coupon to get a good deal. Bed Bath & Beyond suffered from the same thing JCPenney did, coupon economy. People only go to the store when they have a coupon deal on a new toaster oven or Keurig machine. And then the hope was people would buy more stuff while they were there. But the internet has made it so much easier to get the deal without a coupon. No one goes anymore. That's it for today. Please like and subscribe if you found this helpful. And if you really want to support the channel, please go to Proceemo.com and subscribe to our monthly service to see analysis like this for yourself for only $5 a month. And if you have a stock you'd like to see featured next, please comment below. Thank you. Happy investing. Go find some value.